folks, we're diving down into everything affecting your life because it's affecting mine. My portfolio is down $48,000, 12% year to date, worth about $343K. We're going to be actually looking at each one of my individual brokerage accounts in this video, but more importantly, we're going to be talking about inflation, when that's likely to come to an end. We're going to be talking about crypto, real estate investment trusts, my strategies in individual stocks, and what I look to do moving forward. And if that is a conversation you can appreciate, hit that like button, folks, because first and foremost, as much as I'm encoring a recessionary period, I'd love to step back in time to when prices made more sense in stocks. The problem is that is likely going to bleed into your individual life and start affecting your income. But if you've listened to this channel, damn it, and you understand no debt, having an emergency fund, guys, and be willing to sleep on an air mattress on the floor to get some cash by selling your bed and anything else you have lying around the house to take advantage of this, you're not going to be in a very bad situation. But let's get into this with first and foremost taking a look at the markets, because the S&P 500, guys, is now down 21.32%. The S&P TSX, the Canadian Composite's down 7.46%. So there's no surprise that I'm caught right in the middle of this, being down 12%, having a 50-50 split between Canadian stocks and US stocks. But let's talk about what matters most, and that is obviously going to be inflation. When does this come to an end? Well, first and foremost, at least we know the cause and effect. Right now, we know for a fact that oil is what is driving the entire inflationary market right now, which is going to put pressure on interest rates to move higher. Biden, policymakers, governments across the globe are trying to get control of this. And we know with a few policies, a few checks, the fact that Biden is doing meetings with these big conglomerates is a good sign. It means inevitably, as soon as oil gets under control, so will the interest rate and inflationary market, because we cannot continue to see trajectories like this in the oil and gas prices. But the reason we know this is the only contributing factor is because you take a spread of any commodities, whatever interests you the most, whether it's wheat, lumber, copper, all of these things are starting to contract. So that's really good. That means the rest of the inflationary market shouldn't continue to persist or add pressure along with oil, right? So that's good. That's good. That means the factors are now controllable. Now, whether it takes another quarter, 6 months, 12 months for that policy and Biden to come down on the oil conglomerates to start shoveling more oil into the Western world, that's literally what we have to wait for right now. So I would just be patient here and understand that what we're seeing right now is going to be temporary, right? But that temporary move is going to affect the global market. So what's one way to take advantage of it? Well, I always keep telling you guys, it's probably a good thing to have some exposure to oil, whether you're doing it through indexes like the Dividend Aristocrat ETF, like VYM, that gives you exposure to Chevron. Exxon does the management for you. So as they go out of favor into the future, when oil prices start to contract, they'll naturally reweight them for you. But I love Enbridge. Enbridge, guys, what a great company right now to hold, because you don't get direct exposure to the oil market. Their margins aren't really dictated off what oil is doing, because they own the energy gateways, the pipelines, the highways that completely drive the economy. And I think over the coming years, as oil demand needs to start pushing back into the US, these things are going to be needed to take advantage of on a much greater level, and also giving you exposure to natural gas and many other things that are very important to the carbon-free future, right? So I love Enbridge. The value getting a little bit higher, but historically trading still within a good area. So I'm going to be looking to pick up a bit more of Enbridge over the coming weeks. But putting that aside, let's shift into the crypto markets here, guys, because devastation. What did I tell you? Speculations, man. Whether we're talking about the speculative real estate market with fix and flippers and development, or whether we're talking about the speculative small caps and companies that don't show any EPS, these are the markets that get devastated in this kind of environment, right? So when I'm looking at Bitcoin, my eyes start to glaze over a little bit, because I'm not as much into the altcoins. But when I see Bitcoin dipping into the 23K range, I'm expecting it to go much lower than this. For the first time ever, I might be able to feasibly afford a full Bitcoin to kind of give me exposure to that aspect of my portfolio. And yes, I'm not giving up on the crypto market. I just play around with the large guys. Now, it's crazy that the market cap on Bitcoin is now below $500 billion. And like I said, if you want to take advantage of that with me, and again, I'm not looking to just jump into this, but I'm still collecting free Bitcoin every day with the affiliate that I'm using, which is Shakepay. Now, I'm not trying to drive you into a speculative market here, but if you want free crypto while you wait to start adding money to that, guys, if you're Canadian, download Shakepay, use the affiliate link below. You can shake your phone every day and exponentially get free Bitcoin every day you don't miss. And if you deposit $100, you immediately make a 30% return. There's no better investment than that in this recessionary environment. And it's crazy that I'm still show you this, because Shakepay, unlike a lot of these platforms now that have to lock up your money and don't let you pull it off, my God, that's horrible. But at least Shakepay has still been very resilient through this and still offers offering these great affiliate prices. So let's talk about the real estate market. Some of you have been commenting, did you sell out of all your REITs, Kyle? And yes, I did. I mean, if you've been watching the channel, I sold out of Stag Industrial. I've sold out of Medical Properties Trust. Damn it, did it save me a lot of money? Hell yeah, it did. I mean, Medical Properties Trust is devastated. Stag probably going to get more devastated. They got a good balance sheet though. I think they're going to be okay. But the fact is warehousing, the big growth rate they had, likely going to get halted, as we talked about in my last video, with Amazon, stopping like 10 million square feet of logistics centers, which is insane, right? But I'm still holding my Canadian REITs. I'm kind of on the edge with these because I know they're going to continue to get hit harder. There's no reason these things aren't going to keep dropping in this interest raising environment. But through the pandemic, I just feel like RioCan, a lot of the Canadian REITs, these mall exposed REITs, did a good job of readjusting their portfolios, paying down debt, having cash and liquidity available so they can take advantage of a market like this. And their payout ratios dropped dramatically. I just think they're in a good spot to keep paying me through these periods, even though they're devastating my accounts. But let's take a look here, guys, because my TFSA is down to 150,000 now. The Canadian side of the portfolio is doing relatively okay here. I want to try and find a way to get Enbridge in my TFSA, but I don't really want to sell anything to do it right now. You can see RioCan, since I recently bought it in here, is down 17%, whereas my US counterpart is getting hit probably the hardest here. VOO, I'm down 10%. VYM only down 5%. Loving my VYM in this account. The managed account where I hold most of my REITs, guys, I'm not looking to do anything here. I haven't been in a rush to just start shoveling money into these markets, and I'm just kind of patiently letting the dividends collect. I am reinvesting them still into the S&P 500. I mean, I bought one share of VOO, nothing drastic, but I had some cash in here, and finally VOO dropped enough that in my RRSP, which I can only contribute so much a year to, finally dropped below my cash position, so I was able to pick up one share of VOO, and I'll probably continue to cost average into the indexes slowly, like very patiently. I'm not in a rush just to shovel all my cash in this market. But finally, my corporate account here, guys, just taking a look at this. This one's getting hit fairly hard nonetheless. But the problem with my corporation, many of you know, I've got like over 40,000 in cash, and I just want to, I'm so annoyed because my corporate taxes aren't done yet, and I don't know how much of that cash I have capable to me, and I'm trying to use that cash right now to get the rest of my life figured out, so I don't have to worry about things like I'm getting my car fixed with my brakes, rotors, pads, just trying to get all the higher expenses in my life completely resolved right now, so I know for a fact what my bottom line cash position will be without discrepancy. But taking a look here, guys, on the Canadian side of the border, things are still pretty great. Enbridge is flat. I'm only down 8% at the worst on BCE, my Bell Telecom, and Telecom's been doing relatively robust through this because everyone's still going to pay their phone bills, right? But VYM, VOO, again, no surprise, that's where I'm getting hit the most. But yeah, so those are the accounts right now, guys. That's where I'm sitting with that. So moving forward, my primary plan is to take advantage of the greatest opportunities that are presenting themselves in the market. And to me, that is not small caps. I mean, even though I think we're going to start seeing signs of a bottom here inevitably, because until small caps, like I'm looking at highly on a lot of these other small caps, they're not retesting their all-time lows just yet. They could very potentially start getting back there, but for as long as we're in this kind of market where small caps, as devastated as they've been, stop kind of just dropping at the dime of bad news to like record lows, it's a good sign that, you know, we could start seeing that those ramifications inevitably bleed over into the other half of the larger cap market. But for right now, because large caps and real estate kind of lagged the kind of sell-off that small caps experience, they could still see a lot more downside, right? But just taking a look, guys, there's nothing green today. Like, whew, man, it's a weird day. Senior Housing Property Trust, what a surprise. The only green stock on my watch list. But the stocks that I want, that I'm dying for, that I think are going to change your life into the future, that have these backbone structures to society that are undisruptible, even though Google, you know, advertising companies, they're going to get hit, I think Google's probably the top tier, the tippity top of my watch list for stocks I want to buy in the coming months. And I think from a valuation standpoint, the future potential with self-driving AI, I mean, you might have been seeing the news with the sentient AI that Google may have created or whatever, may be a little bit over exaggerated. But nonetheless, guys, with genomics, healthcare, this is an ETF that gives you exposure to some of the largest market cap capabilities into the future. So I'm hoping this thing goes down into like the 1900, 1800 range. And I am going to be on this in ways you can't imagine. Now, Amazon is another one I'm really intrigued by. If it gets into the $80, $90 range, I still think it's too overvalued here. It's a personal preference. You can think about how Amazon's valued at your own pace. I just think that because e-commerce advertising will likely get hit pretty hard in this recessionary period, that there is still some more downside to experience. Now, Tesla, I don't hold any of these shares. Many of you know that. I'm done with Tesla for now. But if the valuations start coming into play, like Tesla's always going to trade at a premium, but I'm just going to sideline that one for now. Same with things like Nvidia. I love these kind of companies, but just like Amazon, Nvidia, Tesla, these are those upper weighted companies that just trade too high. And when you compare them to things like Google, it's just a no brainer that Google's probably a much better buying opportunity. However, I do like the foreign markets right now. Now, this is going to sound a little weird. I'm not all like I'm a capitalist, 100%. But when I look at communism in a market like this, and how devastated something like China has been, they have a lot more dictative control over the commodities market in their current economy, right? Whereas Biden wants to come down on the big oil conglomerates, they have to do it through policy. It's very delayed. It takes a lot of time for the markets to catch up to those policies. Whereas in China, they can just come down and say, hey, tomorrow this is what we're doing. This is how we're doing it. I don't care if you like or hate it, because they're trying to look out for the better of their economy. So I feel like they might have a little bit more control over some of those things. And at the current prices, I am slowly, surely probably going to get back into Alibaba or maybe some of the Chinese indexes, because I just think from an upside perspective, there's probably a lot more opportunity, again, when you're talking about self-driving, robotics, especially considering, Alibaba's Ant Group, the Chinese Communist Party, is going to allow them now to revisit their IPO. So I think there's a lot of opportunity there as well. But again, guys, it is time to just, again, be diligent and make sure you have cash flow above all else. There is no point investing if you don't have your own life circumstances under control. So just make sure you're collecting that income. I wouldn't invest it all super aggressively, but always be buying, always be buying. I mean, I'm still buying stocks, just not like I was, but I am looking forward to these opportunities in the coming months. And I am going to start buying these large caps again, because again, guys, just it's opportunity of a lifetime. Here is the presentation of what March 2020 was like, but now you're all too scared to take advantage of it, just like you were in the March 2020 crash. Don't be that guy. Don't be that guy. I'm going to pass the question off to you. I'd love to know what you guys think about all of this in that comment section below. But in light of this, stay cool, stay awesome. And as always, I look forward to catching you in the next one.